Can Nvidia live up to the hype? Welcome to Market Insight. I'm David Pollard. Traders are pricing in a big move for Nvidia's shares after the AI chipmaker reports earnings later today. Revenue is expected to rise to $24.8 billion from just $7.2 billion a year earlier. It'll be the latest test for a US stock market rally that has taken indexes to record highs this year, much of it driven by the frenzy around AI and its chip makers. Jens Peers, the Chief Investment Officer of Mirova US, is with us. Welcome, Jens. Many thanks for being with us. This is a company that has seen its share price rise by hundreds of percent over the last year and a half or so. What do you expect, and can Nvidia deliver today and live up to the hype?
Yeah, thanks, David. Yeah, I'm reasonably confident that they will deliver to the current expectations, at least for this quarter. Probably exceed them for the first quarter of this year. I think the bigger focus will be on the outlook for the second and the third quarter. There's probably going to be more volatility around that.
Now, options data suggests there could be a $200 billion swing in Nvidia's market cap in the wake of these results. That's actually less than after previous earnings reports, but it could still sideswipe other companies in the sector, some of which, like Supermicro, AMD and ARM Holdings, Palantir, already sold off after their results and are down around 20% from their one-year highs. Does that volatility, that uncertainty, make this arguably a highly risky, even unattractive sector?
Well, that's a good question, and I think the answer to that would be a lot more balanced. When you're focusing on AI, there's very little doubt over long-term investors. If you look at the longer term, like 5 years out from today, for instance, AI is certainly kind of continuing to see very strong growth numbers. And Nvidia certainly has a massive head start versus all of the others. I mean, looking at results from specifically the big four, Microsoft, Google, Meta, and Amazon, for instance, we still see very strong commitment to AI and a very strong commitment to staying leaders for those four. And those investments are only expected to go up from here. And technologically, Nvidia has a very strong head start relative to anybody else. The introduction of the new generation, the Blackwell model, at the end of this year, we believe could be an acceleration even for that growth. The big question is what's going to happen between now and the end of the year when that model is going to be introduced.
And is there another challenge taking shape here, which is that Nvidia customers might wait for even better tech before committing to buying? I'm thinking in particular of Amazon Web Services, which you just mentioned, which withheld some orders for the current generation of AI chips in favor of a newer chip. Is the race for the technology just too fast? And can Nvidia keep up with the expectations it itself is setting?
Well, we believe that the race is not too fast. There's already a shortage today. And with the new model coming up, there's going to be a shortage then as well, even to keep up with the current demand. Not just the big four, but also others will continue to buy, the current production as well of the Hopper GPU. But we'll see somewhat of a slowdown going into the Blackwell introduction. In the meantime as well, as they're ramping up that production as well, CapEx may be a bit higher. So there's going to be some pressure on the margin between now and the end of the year as well. So that may weigh a little bit on the share price, maybe even a lot. But, looking beyond, the next 2 quarters or so, if that would be the case, you would certainly see that as a big opportunity to step into the stock if you haven't already done so.
Well, let's turn to another sector you're focused on, obesity drugs. Eli Lilly and Novo Nordisk, the big movers in this space, but others are desperate to crowd in. Who should we look out for, and what dangers lie ahead for the incumbents and indeed for investors?
Well, sure. Well, Novo Nordisk has been investing in this space for over 15 years now, so they have a long history. A lot of data as well, and going through the trials of these medicines is not an easy task. Eli Lilly obviously has done it successfully, and this big market right now is basically divided between the two of them. But others are looking into the space obviously as well, not just because of the effect on obesity, but the potential positive effects that the GLP-1 drugs can have on sleep apnea, liver disease, cardiac failure, etc. And I think the two options here really would be to kind of develop the drug specifically for that, in which, again, Eli Lilly and Novo Nordisk have a head start here, but also to make sure they can take it in an oral format, so in pills, so we can wrap up production. And that's where we're also seeing companies like AstraZeneca spending a lot of money, R&D money in this space as well. That said, the market is big enough. By 2030, half of the US population is expected to be obese. Less than 2% of that population is medically treated today. So we're not too worried about new entrants coming to the market. But even if they are, the vast majority of the market, 70% plus, is very likely going to be divided between Novo Nordisk and Eli Lilly.
And finally, I know you're also watching biotechs and medical equipment makers where you think there could be good prospects. Why is that?
Sure. Well, we see a good opportunity valuation-wise, mainly around analytical equipment. Companies like Danaher and Thermo Fisher have had very strong years throughout COVID because they were making also testing equipment that was used not only to develop new drugs, including the vaccine, but also to test for COVID. So the comparisons, earnings-wise, have been quite tough since that period. We've also seen a slowdown in spending, government-related and hospital-related a little bit in the core business as well. But we reached the floor on that. And that was mainly driven by the biotech sector getting more difficult access to capital because of higher interest rates and what happened after the SVB collapse as well. But that seems to have found the floor. We see more private equity money going into biotech as well. And with that increased inflow of money, there's also increased spending on analytical and testing equipment. And the current valuations, we believe, really offer a good opportunity to step in these companies that have actually underperformed quite significantly against the long-term trend over the last couple of years.
Jens Peers, Chief Investment Officer of Mirova US, many thanks for being with us today and sharing your thoughts. That is your Market Insight. You can watch more videos on Reuters.com.